And I hope your week is off to a great start. Thank you for joining us this morning. It is a bright, sunny morning here in Bucks County, Pennsylvania, although I hear from Rosa that it is a little gloomy where you all are in Rhode Island. But in any event, we are really glad to be here with you this morning. I am Lauren Peretti, and I am joined by my colleagues Howard Birchman and Sarah Zeiterby. And most of you probably know us by now because we've been doing this series for a number of months now. But for any of you that might be new, we are, as I said, from Housing Innovations. Housing Innovations is a training and consulting firm. We work with the Rhode Island Continuum of Care and with other continuums of care around the country, and we have been doing that for many years. Today's session is on housing requirements for permanent supportive housing, or PSH projects. If you attended the rapid rehousing session that we did on October 15th, the content today is going to be very similar. We know it's a lot of content, so by all means, if it's helpful for you to hear the content again, please stay on. If you'd prefer, we are also happy to point you to what's different in the slide deck. So feel free, if you'd prefer not to listen to some of the same content again, feel free to hop off and reach out to someone on our team, and we will point you to what's different so that you don't have to listen to the whole thing again. So as you probably know, this session is part of a series of trainings that your continuum of care is offering, and all of the sessions are recorded and available on your COC's YouTube channel, and the link to that is in a later slide in today's presentation. So before we get started, just a couple quick housekeeping things. Most importantly, Howard and I'd love to hear from you. So please speak up, ask questions, make comments at any time. You don't have to wait for us to pause and invite those comments. We really want to make sure that all your questions get answered. And it's more fun if Howard and I aren't the only two people talking. So please chime in. If you can turn your camera on, we'd love to see you. So please do that, though we certainly understand if you are feeling not camera ready this morning. And I think Sarah will get the slides uploaded into the chat box momentarily, or maybe Rosa will do that. And if you've got technical issues and you've logged in using the Teams app, you can try logging out and logging back in through your browser instead. And we are scheduled to be together for 2 hours this morning, so we will definitely end by noon, and we will probably end a little bit before noon, depending upon how many questions folks have. So, all right. So before we get started, we know that this HUD compliance stuff can be very dry, and so we like to kick off these sessions with something a little bit more fun. So please take a moment. It's nice for us to see who's with us today, and for you all to see who among your colleagues is here. So take a minute and put in the chat box what agency you're from, what your job is at that agency, where you are located in Rhode Island, and something that is on your bucket list. So for me, I love to travel, and so I've got many travel destinations on my bucket list, including the Greek islands. So if any of you have ever been there, also feel free to put some recommendations for me when I finally make that bucket list trip on things that I should do. So I'll give people a moment to get that stuff in there. You can use the chat feature. So I see Forrest from Thrive Behavioral Health in Providence. Hi, Forrest. Good morning. All right. People taking a couple minutes to get stuff in, so I'm going to keep us going. So a trip to Italy. Ooh, love Italy. Great. Kayla, I hope you make it soon. All right, so I'm going to keep us going. We're going to look at our agenda. So this is what we're going to cover today. And as you'll see, if you were in the rapid rehousing session, it is the same agenda, although some of the content will be a little bit different. So we're going to talk first about things that we have to make sure we do when we are entering a new person into our PSH project. Then we're going to talk about requirements that are related to finding and approving units to be assisted through the COC program. We're going to talk about leasing requirements in permanent supportive housing. Then I'm going to hand it over to Howard. He's going to talk about income verification and subsidy calculation requirements recertification, retention of assistance, and then things that you need to do when you are exiting someone from one of your PSH projects. But before we do that, I just want to say a couple quick words about why the stuff that we're going to talk about this morning matters. So a lot of the things that we're going to talk about today are important because the requirements really are meant to protect the rights of the people that we serve. So for example, right, we know that folks in our programs have the right to confidentiality. People share a lot of personal information with us, and they rely on us to keep that information private. We'll also talk a little bit about grievance rights. If people are dissatisfied with services they receive, they have a right to file a grievance. And there'll be a number of other topics that we talk about today that are really about people's rights. The content that we cover this morning is also important because non-compliance with some of the HUD requirements can result either in a monitoring finding or, in certain circumstances, recapture of the funds, right? So HUD can come out at any time and monitor your projects, though we know with the decimation of the federal workforce, they have fewer and fewer people available to be able to do that. There is still always the chance that HUD will come out and monitor your project. Most of the time, if they find that you're not doing something that they require, they're just going to ask you to correct it. But in some cases, they can actually ask you to pay the money back. We certainly want all the money that comes into the state of Rhode Island to help folks that are unhoused stay in the state of Rhode Island to do that important work. And we never want to see you have to give any money back to the federal government. And so Howard and I will highlight throughout the presentation today when we're talking about something that could be a recapture risk. So next, we are going to talk about the things that you've got to do when someone is first entering your project. And the first and most important thing always is making sure that you have appropriate documentation that the person meets the eligibility requirements for your program. So for PSH, that's going to be both that they meet whatever the relevant homelessness requirement is for your project. So for PSH, that's usually either chronic homelessness or dedicated plus homelessness. And that includes making sure that you've got documentation that an adult in the family is disabled for PSH projects. So we are not going to get into all of those details. TAC did do a webinar related to this, and so that is linked here. But just to suffice to say that this is absolutely the biggest recapture risk that we see when we monitor. If you do not have the appropriate homelessness and disability documentation in your files for every single participant that you serve, and HUD comes out and monitors you, they can recapture the funds all the way back to when somebody first entered your project, which for permanent supportive housing projects can be many years ago, and you absolutely do not want to have to give all that money back. So, all right, the next thing we're going to talk about is grievances. So as I said a moment ago, right, when the people that we serve are unhappy with the assistance that they are getting, they have a right to follow a grievance. But in order for someone to know that they have that right, we have to make sure we tell them that they have that right. So you want to make sure that when people are entering your project, that you give them a written notice that explains that they have the right to file a grievance, that nothing bad is going to happen to them if they choose to exercise that right, what the process is to submit that grievance to your agency, particularly if your process requires them to do something in writing. You want to make sure that you're telling them who is available to help them navigate that process and submit whatever that paperwork is. And then we want to give people a timeline for understanding how quickly we are going to get back to them after they have submitted that grievance. So, and we really like to think about grievances as an opportunity to learn about and improve the things that are not working well for the people that we serve. So we always want to see grievances as part of our effort to always be making our projects better rather than just as an administrative requirement. Check the box, we gave them the notice. All right, so it's so important. So we're talking about confidentiality and releases of information. It's so important for people to know that they can trust us to keep their personal information private, and for them to really understand the situations in which you might release information. And so when someone is entering a project, you should ask them to give you permission to release information in certain circumstances. So you want to ask them to give you permission to enter information into HMIS. And so that should be an HMIS specific release of information. And then there are likely collateral contacts with whom you want to be in touch in order to coordinate services. And so you're also going to want to ask them if it's okay with them if you share information with those collateral contacts. Typically, you're going to have a separate release for each of those different collateral agencies. And we want to make sure that those releases are specific, right? So that they say to whom the person is authorizing you to release the information, what they are authorizing you to release, and for what purpose you're going to use that authorization, when the authorization expires, so that's usually in a year, sometimes 2 years, and that they have the right to rescind the authorization at any time. So just because someone has given you permission, they can always change their mind and rescind that authorization. So, and then finally, we want to remember that that authorization is voluntary, and that the people have the right to say no. And that if someone says, no, you can't put my information in HMIS, for example, you're still going to serve them. You're still going to serve them anyway. So next important rights issue is the Violence Against Women Act. So, or also known as VAWA. So VAWA is a federal law. It establishes certain rights for all domestic violence survivors, regardless of their gender. So it doesn't just protect women, it protects people of all genders. Howard and I went into quite a bit of detail about the VAWA requirements in the policy and administrative requirements webinar that we did. So if you missed it, or you need a refresher, it is linked here on the bottom of the slide. So for today, we're just doing a quick reminder that one of the things that you have to do at project entry is to notify people of what their VAWA rights are. And the way that you do that is by providing them with this notice of occupancy rights that's linked at the top of the slide, and giving them a form that they can use to certify that a domestic violence incident has happened and that they are eligible to exercise those VAWA rights. So it's important to remember that you want to provide that notice to all adults in the household, right? Not just only in households where you suspect there might be domestic violence happening. You want to provide it to every household and to all the adults in the household, because we don't really know what the situation is in the household. And if we only give the notice to the head of household, and that head of household is the abuser and not the survivor, right, then the survivor may not actually ever get the notice of their rights. So as I said, you have to give both of these forms to people when they enter your project. You also have to give it again anytime you are denying them assistance. If you are giving them a notice of eviction, or a landlord who is accepting a COC subsidy is giving it, is sending them a notice of eviction, they should get it again with that notice of eviction. And then finally, anytime you are terminating someone from assistance, they should get these VAWA notices so that they know what their rights are. All right, the next set of stuff we are going to talk about are things that we need to do when we are looking for and approving a unit to get a subsidy under the COC program. So the first thing, I think everyone knows this, right? Participants are not responsible for finding their own units. In fact, staff are responsible for building those relationships with landlords and providing whatever level of assistance people need in order to help them locate a unit that will meet all of the COC requirements, which we are going to talk about in a moment. So, and then as part of this process, obviously, you want to be sure that you are finding a unit that is aligned.
Actually, I think you had to be
that is aligned with their housing preferences, right? So we want to always be exploring with people, what neighborhood do they want to live with? Who do they want to live with? Who do they not want to live near, right? If there's an abuse situation, what neighborhoods might be off the table because it's too close to an abuser. What housing features are most important to them. They love to cook. They want a decent kitchen. And there's a tool linked here. This is not a requirement. It's just it's a resource in case it's helpful for your teams to be able to explore those housing preferences against what is actually available in the housing market that you are operating in. So the next thing we're going to talk about, so one of the things when you're looking for those units that you have to make sure is that the unit is decent, right? It provides a decent quality standard for the housing. And so the NSPIRE, which stands for the National Standards for Physical Inspection of Real Estate, is ultimately, theoretically, they keep telling us, going to be the process that we use to do that, to make sure that people are living in decent housing. It will eventually replace the current standards, which are the Housing Quality Standards, or HQS. Unfortunately, HUD has yet to release guidance for using NSPIRE in COC programs, and so they have once again extended the deadline for moving over from HQS to NSPIRE for our COC and our Emergency Solutions Grant programs. That deadline has now been extended until October 1st of next year. So the notice extending that deadline is linked here. And in the meantime, you should continue to use housing quality standards. The goal for NSPIRE is really a simpler process that is more focused on health and safety rather than on the appearance of a unit. Ultimately, it will be fewer standards than HQS, and it will be a little easier for your teams to do than HQS because in certain circumstances, landlords are going to be allowed to self-inspect. But again, unfortunately, we don't have the guidance that we need from HUD, the use of NSPIRE in COC projects, and so the rollout has been delayed. And in the meantime, while we are waiting for HUD to release that guidance on NSPIRE, we will continue to use housing quality standards inspections. So those inspections, and this is again a recapture risk, so you've got to make sure that before you start expending COC funds on a unit, that you have that unit has passed housing quality standards or HQS inspections. So you've got to do that prior to occupancy and at least every 12 months thereafter. The HQS inspection checklist is linked here. And you've got to do that for all of your units that are assisted with either rental assistance or leasing dollars. And you've got to make sure not only that you've done it, but that the unit has passed inspection, right? So you can't expend COC funds on units that have not passed inspection. And there is no specific requirement that HUD has on, qualifications of the person that's doing the inspections, although it's certainly good to offer your folks some training on that. And you've got to make sure that once you've done that inspection, that paperwork is in the participant files, because it is something that HUD can ask for if they monitor, and it could be a recapture risk if you do not have it. So the last bullet here on this slide, it's important to remember that both the staff time that your team spends doing these inspections, as well as any hard costs, so like mileage, tolls, whatever, to travel, that those things are billable on the rental assistance or the leasing budget line item. HUD considers those rental assistance and leasing inspections, not a supportive services inspections. So, which is a thing that we sometimes also see when we go out and monitor. All right, so the criteria, there's guidance on how somebody could determine whether or not the unit passes inspection. HUD calls these the acceptability criteria. Those are linked here. a couple things just to keep in mind, things that we see sometimes when we're monitoring. You want to make sure that the HQS form is signed, right? So we know who the inspector was and that it's dated. The date is really super important because otherwise there's no way to know that it was done before occupancy and at least every year. And then you want to make sure that the unit that's indicated on the HQS form matches the unit on the lease. So if HUD comes out and monitors, they know that you have inspected the correct unit. And then finally, if the lead-based paint standards are applicable, and we'll talk in a minute about when those are applicable, you want to make sure that they're documented. The other thing I just wanted to say is that if you have PSH units and you are not using the rental assistance or the leasing budget line item, which most probably are, but there are some projects that only use operating, though you don't have to do HQS inspections, you do, of course, want to make sure that the housing people are living in is decent. And so there's another kind of easier process that you can use that's called the habitability standards. So you don't have to, but that's kind of a best practice, right? To inspect at least once a year using the habitability or other similar standards. You don't have to do full HQS. Okay. So, lead-based paint. So we know that exposure. Someone have a question?
Yeah,
I think maybe someone needs to just mute. Yeah. So we know that exposure to lead paint can have really devastating health consequences, especially for young children and for pregnant women. It's bad for everyone. And units that were constructed prior to 1978, so that was around the point at which lead-based paint came off the market, those are the units that you have to worry about and make sure they are inspected if unit was constructed prior to 1978 and it's going to be occupied by a child under 6 or someone who is pregnant. Then you are required to document that you've done a lead-based paint visual assessment, and you do that on the HQS form. So there's a place on the HQS form where you indicate whether or not it has passed that assessment, and you want to make sure that you have indicated that on all of the applicable units. And unlike HQS, HUD does require that people who are doing lead-based paint inspections are trained. And so there's a link here on this slide. They offer a web-based training. At the end of the training, you want to make sure that your staff prints out a certificate and has that available on file should HUD ask for it when they come out and monitor. And then lastly, you want to make sure that everyone in your PSH program has received a copy of the lead hazard information pamphlet. It just gives them information about how they can keep themselves and their families safe from lead hazards. That is linked here, as well as a lead paint disclosure form, which is a form that you can use to notify people about lead hazards, and also they can sign off on to say that they have received that lead hazard information pamphlet. All right. So before I launch us into the Zoom poll, does anyone have any questions? All right. As I said, at any time, feel free to put it into the chat or the Q&A, or just unmute and start talking, and we are happy to answer whatever questions you have. So I think Rosa is going to launch this poll for us. It's a true and false poll. So the questions are: I only need to notify participants of their grievance rights when they have a complaint. Even if I signed a release, the participant can change their mind at any time. I only need to provide VAWA notices to the head of household, and all units require a lead paint visual inspection. So we'll give you a few minutes to answer those, and then we'll go over the responses. All right. Give everybody maybe 10 more seconds to answer the poll. All right. Looks like we have 14 people answered, so maybe Rosa will go ahead and close the poll and share the results. And I will move us on to the next slide, which has the answers. Why is it not letting me do that? All right, I think it does. I'll do that after we go through them. So the first one, I only need to notify participants of their grievance rights when they have a complaint. Everybody got that correct. You want to notify everyone when they come into the project. Next question, I need to request 2 releases from the participant, one for HMIS and one for my agency. It should be at least 2. You want to get one from HMIS and one from every collateral, for every collateral with whom you're going to release information. The next one, even if I have a signed release, the participant can change their mind at any time. That is true. So just because somebody gave you permission yesterday to release information doesn't mean they're still comfortable with that, and they are able to change their mind at any time. I only need to provide VAWA notices to the head of the household. That is false, right? We want to provide those notices to every adult in the household, including but not limited to the head of household. And then finally, all units require a lead-based paint visual inspection. That is actually false. So only units that were built prior to 1978 and that have either a child under age of 6 or someone who is pregnant that's going to be residing require a lead paint visual inspection. All right. So we have the answers here always in the slides in case it's helpful to refer back to later. So next topic, fair market rents. So people probably know this, right? Fair market rents are established by HUD every year, and they are supposed to be the amount that is sufficient in your local housing market to rent a decent but not a luxury unit. We know sometimes it is very hard to rent a decent unit at FMR in different housing markets, but that's the principle behind FMR. FMRs are based on the number of bedrooms in a unit. So the more bedrooms, the higher the FMR is going to be. When you submit your annual project application to HUD, the maximum amount that you can apply for in a rental assistance or leasing project is going to be based on the FMR. So FMR is the basis for your budget. For a leasing project, you also cannot rent a unit that exceeds FMR. Not true for a rental assistance project, and we'll talk about that more in a minute. And then it's important to remember that FMR is meant to be inclusive of utility costs, right? The utility allowance schedule. So your local PHA publishes every year a utility allowance schedule, and that schedule tells you how much of an adjustment those units, you make on those units when for certain utilities that are not included in the lease. And we'll talk about that more in a minute when we talk about rent reasonableness. Oops. So rent reasonableness. So in addition to doing HQS at project entry, right, HUD also requires that you document rent reasonableness determinations for all units that are assisted with COC rental assistance and leasing dollars. So if you are a rental assistance project, meaning you have a rental assistance budget line item in your budget, the maximum amount that you can pay is going to be the reasonable rent, right? For a leasing project, the gross rent that you can pay is going to have to be at or below both FMR and rent reasonableness. So for a rental assistance project, you can rent a unit over FMR as long as you have enough money in your budget and you have documented that you have done a rent reasonableness determination and that the unit meets those standards. So you've got to do rent reasonableness like HQS. You have to do it, at the beginning when someone's first entering the project, and then you have to do it at least annually. And like HQS, you want to make certain that that documentation, reasonableness determination, is in every single participant file, and the unit on that documentation matches the unit on the lease. So this is a sample format that you can use for rent reasonableness. It's linked here at the top of the slide. It doesn't require that you use this specific form, but it's a form that many folks do use. You'll see it has 4 columns. The first column is where you put the information about the unit that you are going to be assisting with HUD dollars. And then in the next 3 columns, you put the information about the comparable units, right? So you've got to basically demonstrate here that the gross rent of the assisted assisted unit is not more than the 3 comparable units. And comparable basically means it's the same size, it's in, more or less the same neighborhood, and it's got similar amenities to the unit that you want to lease. All the way at the bottom here, near the bottom here, you see this row that says unit rent, utility allowance, and gross rent. And so there, right, you want to make sure you're doing an apples to apples comparison. So if one unit has utilities included and the other unit doesn't, this is how you adjust for that. So you put in unit rent the amount that gets paid to the landlord. Then under utility allowance, you use that PHA utility allowance schedule that we talked about a moment ago. You look up what's the utility allowance for any utilities that the tenant is responsible for paying. You put those amounts here, and then you add the 2, and that equals your gross rent. All right. Conflicts of interest. So HUD prohibits conflicts of interest in the COC program. And basically, a conflict of interest is, you can think about it like it's a situation in which a person has competing interests, and those interests are in conflict with one another. So an example is, if I'm a staff person at a COC project, right, I am obligated to spend grant funds prudently and not pay more than necessary for anything, right? If in my personal life, I also happen to own some properties and I am a landlord, it's in my personal financial interests to charge as much rent as I can for those units, right? So that's a conflict of interest. So HUD says you can't rent units that someone on your staff or someone on your board or an immediate family member of theirs owns, because it's a conflict of interest, right? You don't want to be paying too much rent to line the pockets, right, of someone on your staff. You want to make sure that you're paying the least amount of rent possible. So, and that it's really, these prohibitions are really intended to help make sure that our projects are putting our duties to the people that we serve first, rather than putting personal financial interests first. So another example is that if your agency owns a unit, right, you are the landlord for that unit, you have to have a different entity do the HQS inspection and the rent reasonableness determination, right? Because HUD considers that a conflict of interest. You can't do HQS or rent reasonableness determinations on units that you own. So you have to either contract with someone to do that for units that you own, or sometimes if you can do like kind of a swap with another agency, right? They're going to do HQS and reasonableness determinations for your units, and you in turn are going to do it for their units. All right. Environmental review. So HUD requires all COC projects to complete environmental review before you start expending COC funds. This is good news. It has not been very well advertised, but HUD actually did a nationwide environmental review that covers all projects it started actually in federal fiscal year 2023, but like I said, it wasn't widely announced, and it covers all of the types of projects that are listed here on this slide through federal fiscal year 2027. So most of you are probably using either tenant-based rental assistance or tenant-based leasing assistance, probably mostly rental assistance. And so the good news is, if that your tenants in your PSH project get to choose their own unit, then you are covered under the nationwide review, and you do not have to do environmental review for your project. However, if your PSH project, maybe you're a project-based rental assistance project or a sponsor-based rental assistance project, or you're a master leasing project where all the units are located in a specific place and participants don't get to just go out in the community and look for their own unit, then HUD considers this a choice limiting action, and you're going to need to do an environmental review. And the purpose really of environmental review is to ensure compliance with various federal environmental requirements. This is a recapture risk, right? So you want to make sure, if your folks are not choosing their own units, that you've done environmental review before you have expended any HUD funds. And you are required to do that at least every 5 years. And so if this is applicable to you, you want to make sure that you check the date that your last environmental review was signed off on by your by your responsible entity. And that's how you would determine 5 years from then is when your environmental review would expire. We'll talk about responsible entities in a moment. So the form that you have to use is linked here. It's the CEST form. There is also a sample completed CEST form linked here, so you can look at that sample when you're doing this. If your project has units at multiple locations, right? So maybe you're master leasing units in 2 different buildings, or you've got 2 different buildings and they're all both in one project application, you need to do environmental review for each of those locations. So responsible entities. So you've got to have what HUD calls the responsible entity sign off on your environmental review. And the responsible entity is never going to be a staff person at a nonprofit agency. It's always going to be a government official. So the responsible entity is the unit of local government where the project is located that exercises land use responsibility. So in a city, sometimes that's like the Department of Housing, or maybe the Department of Community Development. A lot of times in smaller places, we see like the town administrator or even the mayor being the entity that is signing off on these environmental reviews. So again, you cannot sign off on your own environmental review. You've got to get a government agency official in your locality to sign the form. If you are unable to get somebody to sign off as the RE, as the responsible entity, document your efforts to get that signature and then notify the field office that you've been unable to get it signed, and keep documentation of both of those things on file should HUD ask you for environmental review when they come to monitor. All right, questions people have before we launch into the poll? Okay, Rosa, you want to start our poll, please? So again, these are true, false questions. So the first one, you don't need to worry about rent reasonableness if the rent is below FMR. The second one, to be considered comparable, a unit must be located in a place that is comparable to the assisted unit, comparable in size, and of comparable quality, and have comparable amenities to the assisted unit. A project needs a new environmental review every 3 years, and dogs are perfect. Is the last question. Don't get that one wrong. Give you a few minutes. All right, give you guys about 10 more seconds to get answers in. I see some people are putting answers in the chat, which is also a perfectly fine way to do it if you are not able to use the Teams poll function. All right, Rosa, you want to end the poll and share the results? And here are our answers. So first question, you don't need to worry about rent reasonableness if the rent is below FMR. That is false, right? So for both leasing and rental assistance projects, the units have to be demonstrated to be determined to be reasonable. So that is a requirement. Even if they're below FMR, you still have to do rent reasonableness determinations. Second question, to be considered a comparable unit, the unit has to meet all of these things. I won't read them all again, and that is true, and everyone got that right. Third question, a project needs a new environmental review every 3 years. It's every 5 years, so that was kind of a tricky one. And again, you only need that if your participants do not choose their own unit. And then lastly, yay, everybody got it right. Dogs are absolutely perfect, and we also love cats, so no discrimination against cat people intended. All right, so I'm going to talk about leasing requirements, and then I'm going to hand it over to Howard, and he is going to take us into the end zone. So all PSH units have to have a signed, usually in a PSH unit, it's a lease, not an occupancy agreement. And all of those leases also have to have a VAWA addendum that establishes contractually in the lease people's rights, for example, to break the lease if they are in a domestic violence situation. And that the most recent VAWA addendum that HUD has made available is linked here on this slide. So everybody has to have a lease, and the initial term of that lease has to be 1 year, and that lease has to be automatically renewable and terminable only for cause. And then finally, you want to make sure that for every single unit that you are assisting through the COC program, that there is a copy of that lease in the participant files, and that is also a recapture risk. So if HUD comes in and sees that you've paid rent on a unit and there's no lease for that unit, they can recapture those funds. Most of you are going to be using a leasing arrangement that looks like this. So most of you are probably using the rental assistance budget line item rather than the leasing budget line item. And you are going to have a contract. Your agency, either the recipient of the HUD funds or the subrecipient of the HUD funds, is going to have a contract with the landlord, and we'll talk about those contracts in a moment. And then the lease is actually going to be the client is going to rent directly from the landlord, right? So your agency is not a party to the lease in a rental assistance project. However, if you are getting money on the HUD leasing budget line item, HUD requires a different arrangement for those leases. So it really is a master leasing scenario if you're using the leasing budget line item. So your agency is going to hold the lease. You're going to lease those units from the owner, and then you are going to sublease those units to your program participants. So it is not allowable in a leasing program for participants to lease the unit directly from the landowner. It has to really be a master leasing situation that looks like the graphic here. So where you are using tenant-based rental assistance, you are also going to want to have what's called a housing assistance payment or HAP contract. And that really is a contract between your agency and the property owner that lays out the terms for the rental assistance. So the term, right, the start date and the end date of the HAP contract should be the same as the start date and the end date of the lease. And that contract should establish things such as the amount that the subsidy is going to pay versus the amount that the tenant's going to pay. It should say that that amount is subject to change as the tenant's income changes. It should prohibit side deals, right? So sometimes we see landlords say to our clients, hey, look, we know that the agency is only going to pay $800 a month for this unit, but it actually costs $1,000. And so you're responsible for paying that $200 on your own out of pocket. That is a side deal. It is not allowable. And the housing assistance payment agreement should specify that such side deals are not allowable. You also want to make sure that the HAP contract indicates conditions under which you can terminate the subsidy. So, for example, if someone gets evicted, right, you're not going to keep paying the subsidy to the landlord. Or if somebody goes to jail for 90 days, right, more than 90 days, you're not going to continue to pay the rent beyond that 90 days. You'll also want to make sure that the HAP agreement says that you have the right to inspect the unit with reasonable notification to the participant and the landlord, and that if such an inspection finds that the unit is substandard, it doesn't pass housing quality standards, then you are going to withhold the subsidy until such time as the landlord makes the repairs and the unit passes an inspection. And then lastly, it's a good idea to make sure that the terms for returning somebody's security deposit at the end of the lease is outlined in the HAP agreement. So, for example, whether that security deposit is getting returned to your agency or whether it is getting returned to the participant that you are helping. So I think that brings us to the end of this series of slides. If there are no questions, I am going to turn it over to Howard.
Good morning, everybody. It is me. Thanks very much for being here. My pleasure to be with you this morning. Let's see if I can control what's going on here. Okay, as Lauren had indicated, I'm going to talk to you some this morning about income verification and subsidy calculation, sort of favorite topics here. First off, again, we want to make it very clear that it is indeed a condition of participation in the continuum of care programs that participants provide information about their income to the program, to the recipient. They have to do that because you need that information in order to calculate the correct subsidy. If they don't provide you that information, you can't be assured that you're providing the right amount of subsidy information, and therefore you can't serve them. So even in a Housing First program, there are some requirements, and one of the requirements is that folks provide you with income information. Remember, as this other bullet contains, we still are operating under the system where people who voluntarily live together and choose to remain together can declare themselves to be a family, but however, all members of the household must provide income information. Now, we don't count the earned income of children under the age of 18, but if children under the age of 18 are receiving some benefit income, we do count that as income. Everybody else, we have to have every member of the household identify what income they receive, because basically the subsidy is based on the total household income, not just the income of the head of the household. Now, additionally, we do know that from time to time, people will have changes in their income. Generally speaking, you get notified more quickly when folks' income decreases because they need more subsidy, but indeed, they are also expected to inform you when their income increases as well. Generally speaking, we don't need to make that much of an effort on that as long as you are reassessing their income on an annual basis. If there were those increases in income during the course of the year, you don't need to be concerned about that. But if they do notify you that their income has decreased and they need further subsidy, you're required to basically collect that income information, verify that their income has decreased, and provide them with a change in subsidy if that is necessary for the participant. Again, as the slide indicates, providing this income information is not a voluntary thing. It is a requirement, and failure to provide that information could be a reason to either not provide assistance or even to tell them they're at risk of having their assistance terminated because they're not providing you with that information. Again, HUD will come from time to time and monitor projects. If they do come and monitor your project, one of the things they may very well look at is these kinds of subsidy calculations, and you need that accurate income information from participants in order to be able to satisfy HUD's concerns that you're providing the correct amount of subsidy. So again, just to clarify, anything regular source of funds that a member of the household receives is considered to be income to them. Regular is the operative word here. Obviously, if folks are employed, if they are employed in a job that has some tips incomes, if they wait or do other services like that, they're supposed to provide income not only on their wages, but also on the tips that they are receiving. If they are regularly receiving payments from Social Security, if they've got a pension or disability payments, all of that counts as income, similar to these other benefit incomes, unemployment, workers' compensation, if there are severance payments. If folks are getting temporary assistance to needy families or other kinds of welfare assistance, that counts as income. If there is court-ordered child support payments that are supposed to be made to that household, you are supposed to consider those court-ordered child support payments as income unless you receive documentation from the household that they are not receiving that child support. So basically, the default assumption is that folks are receiving court-ordered child support, even though in many cases that is not the case. If they are not receiving that income, you want to have some documentation from them that they are not receiving that income, and also that they've contacted the spouse that's supposed to be providing that child support and sought to obtain it. Similarly, you might have a situation where there are some grandparents. Maybe the family does not have many resources, and the grandparents on a monthly basis are providing a couple of $100s to the household to assist them to pay for food or other expenses. If it is a regular thing that every month or every other month and they're receiving it, you have to count it as income. If it's Christmas time and the grandparents have some cash and provide an envelope with cash to the family or the kids, that is not considered to be regular, and that is not something you would count as income. If, for example, a participant has a business, now these days, a lot of the gig work, Uber, Lyft, DoorDash, things like that, oftentimes that is considered to be business income. If they're getting income from a source like that, they are allowed to deduct out of that income their expenses, their gas expenses, their insurance payments, their car payments, things like that, payments that they have to make in order to be able to sustain as a business. That can be deducted, and you're only in the case like that, if there is a business going on, you're only going to count the income after you deduct the reasonable expenses from that. It is not unusual, and indeed, since we are trying to focus on serving chronically homeless, it is not unusual for participants to have zero income. Again, if folks have zero income when they come to the program, that's not an unusual thing. However, a key to housing stability is having a regular source of income. So if people have no income, it really behooves the program to make best efforts to try and assist those households to obtain regular legitimate income. It is very difficult to live in the society without any income whatsoever. But however, if they do not have income, what we do ask is that at least on an annual basis, they complete an affidavit saying that they're certifying that they have zero income. And it's important that you have that on file, have some documentation that you've made best efforts to track down the income. There isn't any, and they verified to you that they have zero income. Again, as we've said, it's in all things HUD, you really want to get third-party documentation wherever possible. That means you really want to have pay stubs, copies of checks, any kind of thing, documentation that you can do that shows that what the actual income that is received by the household. There are times when, for a variety of reasons, because of some disability the households have, it may be difficult for them to comply with those requirements. If that is the case, it is permissible to provide a reasonable accommodation to find an alternative way to try and get that information that the participant is able to comply for. Again, you've got to have documentation of income for all members of the household. Again, the amount of income that you show in your documentation should be identical to what the income, the gross income that you're showing on your income on your rent calculation form. So you want to make sure that not only are you collecting that income, but that is the income that you're using to calculate the rents. And of course, you want to have all this documentation on a regular annual basis in the participant files. Again, in the event that HUD comes and monitors, they'll see the income that you used to do the rent calculation. They'll be able to go back into the file and show that you documented that that is actually the total income that is received by that household. There are some things that are regularly excluded from being considered part of income. Important thing is if there are children who are under the age of 18 and they have a part-time job after school, on weekends, over the summer vacation, things like that, if they're below the age of 18, any employment income you pay absolutely no attention to. Those kids get to keep that income for themselves. As I had mentioned earlier, there are times when youth sometimes are receiving Social Security payments on behalf of a deceased parent. If that is the case, you do consider that benefit received by those children to be income. Temporary, non-recurring, or sporadic incomes or gifts. So again, an example I gave earlier, if you got grandparents who for the kid's birthday, for Christmas, are going to give, a couple $100 to the child, that's wonderful. You don't consider that to be a gift. Again, if you've got someone, there was a time when some people would show up in front of Home Depots and things like that looking for day labor. If that is something that folks are doing on a regular basis, and that is really how they're supporting themselves, then you count that as income. If it's something that folks do every now and then, and there's no regularity to it, then you do not consider that to be income. The classic example that the government uses is that there is every 10 years we compute the 10-year census. Census work is always considered to be a temporary work assignment since it only lasts for a couple of months. And the guidance has always been that if you have kind of work like that, it's considered to be temporary income, and something like that you would not count as income. Again, sometimes our households will have a foster child become part of their household. If that is the case, you do not consider the payments that they get for taking care of that foster child to be income. But mind you, if those foster children are regular members of the household, you've got to give them a unit large enough to accommodate both those foster children and any other children and other members of the household. If we have a situation where your participant has actually won the lottery, and on top of that, they choose to take their lottery payments not in regular annual payments, but in a lump sum, then that's not considered income. That's considered in addition to their assets. If they take their lottery winnings in regular payments, it is considered to be income. Additionally, unfortunately, sometimes people are involved in an accident and they get injured, and sometimes there are insurance payments as a result of those injuries. In those cases, you do not pay attention to that. You do not consider that to be income. Same thing if the household inheritance fund. So we'll talk briefly about how it is that we treat assets, but basically anything that is in addition to their assets is not considered to be income. It's considered to be an increase to their assets. In the event that there are any reimbursements that they receive for medical care, that's not income. There are times when a household member is disabled and the only way they can continue living independently in the community is with the services of a live-in aid. Live-in aides are not considered to be members of the household. They're there only to provide a service for the person with disabilities. In that case, we pay no attention to the income of that live-in aide. They are not a member of the household. They are there to provide a service. Same thing, student financial aid. Any financial assistance that received by a student is not considered income for this. Note this final note here. If you've got a full-time student, by the way, a full-time student is whatever their educational institution defines as being a full-time student. So whatever the course load that that educational institution says is the characteristic of a full-time student, that's what you consider to be a full-time student. When you've got that situation, any income above $480 is not counted as income. The first $480 is considered to be income. And that's because, by the way, which we'll show you in just a minute, you get a deduction of $480 for a dependent, and so it just wipes out that deduction. Again, full-time students can continue to be considered dependents even if they're over the age of 18. So I just made a prior reference to the allowable deductions. These deductions, by the way, have been in, I've said this before, they've been in place forever. I have no idea when they started. I mean, I've been doing this for decades, and I have not seen these numbers change. They will, much like Lauren made reference to those Inspire standards. There are also some different standards. It was under a new modernization thing called HOTMA. These deductions are supposed to increase, and then when they increase, they're supposed to be tied into a cost of living adjustment. Among the many things that HUD has not gotten around to implementing for this program are these reforms due to the HOTMA thing, but one of these days they'll probably get around to this, assuming that they reopen and have some staff to do this kind of work. So if you have a household that is elderly or disabled, meaning the household head is either 62 years of age or older, or the household head is a person with disabilities, that is an elderly or disabled household, and that household is entitled to a single $400 a year deduction. So basically, it's a massive sum. So if you've got a elderly disabled household, they automatically get that $400 a year deduction. That means everybody in permanent supportive housing, since by definition, you need to be disabled to be in permanent supportive housing, everyone in those in that kind of housing must be qualified for this $400 a year elderly disabled deduction. You get a $480 per year deduction for every dependent in the household. That's only limited by the number of dependents that are in the household. If you are classified as an elderly or disabled household, if there are non-reimbursed medical expenses, and that's broadly construed, so if they're paying for eyeglasses, if they're paying for over-the-counter prescriptions or over-the-counter medications that is necessary for them to be able to live, those are all considered to be non-reimbursed medical assistance. In the extent to which they have medical costs that exceed 3% of their gross income, all of those expenses above 3% of their gross income can be deducted from their gross income. And finally, reasonable costs of childcare, again, for children under the age of 13, if they're non-disabled, children under the age of 18, if they are disabled, their reasonable cost of childcare in order for the other members of the household to be able to work or pursue their education can be deducted. Again, it needs to be reasonable, so you need to demonstrate that that is similar to in line to what is paid for childcare in the community. And there is a cap on this. If the amount, if the childcare is being used in order to have a family member be employed. Basically, the cost of childcare cannot exceed the income that that household member is receiving from their employment. So that is a potential consideration there as well. Okay, I mentioned that we were going to talk that assets are treated separately. Households are allowed to have, first of all, things like a reasonable car that may be necessary in order for folks to be able to go to work or go to medical appointments and stuff like that. That's not considered to be an asset. Normal household furnishings are not considered to be an asset. Assets really are either savings or if they happen to fortunately own some real property or something like that, those are all considered to be assets. If they are assets, you do not count the asset as income. You count the income that that asset would would produce if it was in a regular passbook savings account. Right at the moment now, they're using the passbook savings rate of 0.45%. That is 0.045 or 0045. So therefore, that would in if there was an asset of $50,000, as you can see, it produces very, very little income. And indeed, effective calendar year 2026, the passbook savings rate is going to go down to 0.4%. Remember, that's not 4%, it's 0.4% that we consider to be the passbook savings rate. So it's pretty darn low. And on top of that, we don't generally see all that much in assets either, but it's good to know this information. Now, as we indicated, Lauren said this, if you're receiving rental assistance, it is a program requirement that people pay rent. You know it, basically the maximum rent payment, it's always been, it's either 30% of the adjusted income or 10% of the gross income. The adjusted income is after those deductions that I pointed out before, the 400 for the disabled household, etc. There is, unlike the Section 8 or Housing Choice Voucher Program, there's no such thing as a minimum rent in the continuum of care program. So we don't charge folks a minimum rent. If they've got zero income, they pay zero rent. And the only thing in a continuum of care program, if they're participating, the only payment that you can require a participant to make is their required rent payment. You're not allowed to require them to make any payments beyond that. And again, as we've said, we are in all cases, HUD is looking for third-party verification of income as well as other information is always preferred. If you cannot get that third-party written documentation, you are allowed to get on the telephone with an employer or other source of income. You want to record who you spoke to, the date you spoke to them, basically the contents of the confirmation of the conversation, and that they verify to you that this is the amount of income that that participant is receiving. Only when you've tried both, asked for the written documentation, tried to get a verbal confirmation. If you cannot do either of those and you document that you've made those efforts, you can accept some level of self-certification if you're not able to find this information any other way. But again, outside documentation is always preferred. Again, we talked about gross or net income. Generally speaking, you're going to be based your calculations on the net income. It's their income after their allowable deductions. Again, as I noted, if folks are doing Uber, Lyft, DoorDash, something like that, you want to allow them to deduct some expenses of running that business that they're doing, and you want to show that you're just calculating their income based on their net business income. Lauren made some reference earlier to the utility allowances. Utility allowances, again, are set by your local housing authority. Housing authorities are supposed to set the utility allowances at the level of utility consumption that an energy conserving household would use. Therefore, in almost all instances, the utility allowance is generally below what participants actually are paying for their rental income, but that is the ceiling on the amount that you can reimburse them for. Generally speaking, as we've said, people are required, if they have income and they're receiving rental assistance, they're required to pay rent. Their first obligation for their rent payment is to pay their utilities. To the extent that their utilities equals their rent contribution, then basically they pay the utilities and you pay the rent to the landlord. To the extent to which their payment for their rent payment is greater than the utility allowance from basically the greater amount that's beyond the cost of the utilities is going to be paid directly to the landlord, and you pay the balance of it to the landlord. If you have a situation where their rent payment is either zero or is less than the utility allowance, then you are required to make a reimbursement to that household for that utility because they are owed to that. Generally speaking, the preferred policy is not to make those reimbursement payments directly to the household, but to get their advance written approval and make those payments directly to the utility. The reason for doing that is, I mean, our folks live in pretty much state of economic crisis from time to time. In any given day, there could be a lot of other things that are even more compelling than paying for utilities with their resources. The kid may need the doctor, the kid may be really hungry, and that hungry kid is going to be more urgent than the utility payment. Those are all the reasons why it's better to make those payments directly to the utility when you can and when you have the participant's permission to do that, making sure that the payment goes the way it's supposed to go. Again, you're supposed to provide to the participants this notice of their rent obligation, telling them what it is they're expected to pay. Also notify that the landlords, that's part of that HAP agreement that we talked about, the Housing Assistance Payments Agreement. You want to notify them in writing, both the landlord and the participants, what the program is paying, what the participants are expected to pay. And again, you want to make sure that the participants have in writing that they are obligated to report to you any changes in their income. Okay. And we come to our first Zoom poll of this series. While asking Rosa to load up that poll, the questions are, this is a true or false, providing documentation of income is optional for participants because it's a Housing First project, true or false. Joe is 22 years old and babysits for his niece 1 day per week and gets paid cash. This income is countable when calculating rent. Is that true? And finally, Ron and Jeremy are both disabled and consider each other to be family. They live together in rapid rehousing or permanent supportive housing, and each receive their disability deduction of $800 a year total when calculating the rent. Is that true or is that false? Those are your questions. Take a moment to complete those questions, and we will be back to you. Okay, how are we doing? Why don't we see what our results were? So here are the answers. So providing documentation of income is optional for participants in the Housing First project. There are a lot of things that are optional in Housing First project, but not providing documentation of income. That is a requirement, so that one is false. Joe is 22 years old and babysits regularly for his niece. That is regular income, even though he's paid cash, even though it's a great thing that he's doing that for his niece. That cash income is considered to be income that should be reported as income. And then finally, Ron and Jeremy, they're both disabled, consider each other family. However, they're part of the same household. The disability deduction is one per household. Even though they're both disabled, you only get one deduction per household. So that, unfortunately, is a false answer. Okay, thank you so much for that quiz. Okay, now when you are first entering a person into the program, you are entitled to provide them with the first and last month's rent that can be paid to the landlord when they move into the apartment. And in addition to that, you can provide 1 month's worth of security deposit. The program regulations actually allow 2 months, but that is contrary to Rhode Island state law, in which we are not allowed to contravene. So we're going to pay no more than 1 month's rent for security deposit, and we can potentially pay both the first and last month's rent upfront when signing a lease. Sometimes providing those 3 months of payment upfront helps to get a landlord to participate in the program, so we take advantage of that opportunity. As we said, there are a number of requirements that need to be done on an annual basis. Lauren was very clear. You need to either do the housing quality, or in the course of the next year, if they get the Inspire standards up and running, you'll need to do that instead. The rent reasonableness has got to be done on an annual basis as well. Market conditions do change. What had been reasonable 1 year might not necessarily be reasonable in subsequent years, so you need to verify that that rent remains reasonable. Again, if you've got a situation where doing project-based, sponsor-based, something like that, situation where the participants themselves are not choosing the unit in which they reside, then you need to, and they've moved to another unit under that basis, then you've got to basically update your environmental review list to include those new units. Again, you need to, on an annual basis, get information about their income, extent to which there are differences in that income. You need to update the rent calculations to make sure, you're providing the correct amount of subsidy. On an annual basis, the lease should come up for renewal. You should send them an updated housing assistance payment contract reflecting any changes in rent or tenant payments to them. There's some information that needs to be provided into HMIS having to do with income and other information like that that needs to be provided. In the event that you have some sort of automated or automatic system to regularly send out rent payment checks to the landlord on an annual basis, you want to check that to make sure that the amount of automatic payments that you're making are indeed the payments that are due to the landlord. Well, one thing that we never want to have happen, or we want to avoid happening as much as possible, is having our participants be evicted from a unit. As you all know extremely well, it is hard to find units for participants, full stop. If a participant has a recent eviction on their housing history, it becomes even much more difficult to be able to get them a new unit. So you want to really avoid getting that eviction on their records. Of course, this is a lease-based program. Landlords are not able to say, you get out. They can only get a participant out of their unit through court-ordered proceedings, and you want to basically maintain communication with those property owners to avoid it. If the property owner is signaling they're done, for whatever reason, that participant has really just made the ongoing relationship impossible. What you always want to try and see if there's a way you can negotiate with the owner to let that participant out of the lease, help them find another unit, try to avoid that eviction from happening. Make sure that if the landlord notifies you that they're about to do something with the tenant, you intervene as much as you can to prevent them from being evicted. Having somebody evicted again is just going to make it immeasurably more difficult to rehouse that participant. So you want to use your resources to prevent that from happening. However, in the event that folks do indeed lose their unit, that does not automatically mean they can no longer receive assistance from the continual care program. Our goal is to prevent homelessness from people we're serving and in general. So we do not want to be exiting people to a homeless situation. If possible, you want to maintain their enrollment in the program and seek to rehouse them in the unit that meets their needs and where they will be able to maintain it. If that doesn't happen, if they get evicted, you're not able to maintain it, that does not mean that they cannot come back in sometime in the future and seek assistance again, but they would have to come back through the coordinated entry system and they would need to be prioritized for that aid. Oh, okay. Now we've got another Zoom poll coming up. So the question is, what determines the utility allowance I should use to calculate participants' rent share? The current month's amount shown on participant's utility bill, the amount shown on the PHA utility allowance schedule, the amount of arrears shown on the bill, and eviction automatically results in termination from the COC program. So the first one, choose A, B, or C. For the second one, true or false, eviction automatically results in termination from the program. These are just two questions. I think they're fairly simple. Let's see what the results are. So the utility allowance is based on the PHA's utility allowance schedule. We've said that a few times, so I think folks were pretty gotten that. And again, just because someone is evicted does not automatically terminate them from the program. You are expected to make some efforts to continue assistance to that participant to the extent possible. Thank you for participating in that poll. Oh, now, when it is indeed time for people to leave the program, there are some requirements that you need to fulfill. First, you need to, if they're being terminated, you need to provide a written notice of termination. Now, ideally, when a person or a household first enters your program, they should receive in writing a copy of the program rules, the kinds of circumstances under which they might be terminated from the program. They should be informed of that when they first enter the program so they will know what the requirements are. You don't want to tell them that what you've done is an offense that requires termination, and the first time they find out about that is when you're terminating them from the program. So you want to give them a written copy of the rules on program entry as much as possible. Then if there is a cause to terminate them, you want to provide that in writing. You want to cite specifically the rule that they violated, and that is the reason why they're being terminated. You also want to tell them that they have the right to appeal any decision to terminate them from the program. Remember, if somebody is appealing your decision to terminate them, that appeal has got to go to somebody in your organization who is superior in rank to the person who made the decision to terminate them. So if, for example, you've got a program director of your permanent supportive housing program, and they are the ones who have notified the participant that they're being terminated from the program, then you do not appeal to that program director. But if there's an executive director who is superior to that program director, the appeal is going to go to that executive director, not the program director. If it's the executive director who made the decision to terminate that participant, then that appeal has got to go to someone who's superior to the executive director, which means in those circumstances, it would probably be a member of the board of directors who would have to hear that appeal. Again, as Lauren indicated earlier, at time of termination is when you give them the information about the rights under the Violence Against Women Act. That's both the notification of occupancy rights and the incident self-certification form. And in the event that you do not, basically you want to send all these notices to the last address that you have for the participants. And of course, if you are terminating the participant, you do not want to continue paying rent to them. So you want to stop paying that rent as of the effective date of their termination from the program. Now, in the event that a household moves out, basically you can continue to pay rent. One of the things we want to do is maintain relationships with our landlords. We're not going to pay rent for units that are not being occupied, but you do have this 30-day grace period from the end of the month in which the unit is vacated, in which that rental assistance can continue. If that unit is vacant, it's passing housing quality standards, it's possible you could move another participant into that unit. If that happens, you can continue paying rent on behalf of that unit because it's on behalf of another participant. If you have a situation where a person is temporarily in a hospital or briefly incarcerated, you can continue to pay that rental assistance for up to 90 days, but no longer than 90 days. However, if it is a family, if there's more than one person in that household and the person is either passed or is in an institution for greater than 90 days, you can continue to assist the remaining members of that household until the lease expires, in which case you are no longer allowed to provide assistance to the household. In the event that there is damage to the unit caused by your program participant, you can pay using your rental assistance funds up to 1 month's rent to cover those damages. This only happens in the event that when the participant has actually left that unit, so you can't make these property damage payments while it's still occupied by your assisted household. But if they've left, you can make that payment. If you are YHDP and you have requested some of the YHDP special activities, you can often provide up to 2 months rent for this damage to the units, but that's only for YHDP and is only for a YHDP program that has requested that special provision. And finally, it's, as I said before, the property damage is only in effect when they've actually exited the housing unit. It does not cover damages while they're still in the unit. Okay, finally, I think this is going to be our last Zoom poll of the morning. So let's get this baby launched. The question is either all true or false that participants always have the right to appeal a termination decision. If they're in a nursing home for 100 days, we can use rental assistance funds to continue paying the rent, or we can use COC funds to pay for damages up to 1 month's rent in addition to the security deposit. Those are your questions. Answer them at your convenience, and we'll give you a few moments to have the response. We're seeing a lot of correct answers come in. Let's take a look what the slides tell us. Participants always have the right to appeal a termination decision. Absolutely. And indeed, this means, there are times when, for a variety of reasons, people will voluntarily decide to leave your program. Maybe they're moving out of state, variety of reasons why they might voluntarily want to leave their program. You still want to inform them that they have rights to to retain assistance. You want to give them, even if they're voluntarily notify them that they have a right to appeal that decision if they change their mind. We said this several times. If they are institutionalized for greater than 90 days, you can no longer use rental assistance to continue paying rent. So therefore, this 100 days is longer than 90 days. So that statement is going to be false. And this one is true. You can use COC funds to pay for damages up to 1 month's rent. Sometimes in the case of YHDP, it can be longer than that. But again, remember, do not make those payments until such time as the unit is vacant. Okay. We've done a number of trainings already, and we are also joined by TAC and other organizations in doing these trainings. The schedule of upcoming trainings is on this link to upcoming trainings. The trainings that have been completed and are in the can, as it were, recorded, is accessible by clicking on this link to recorded trainings. Very early in this session, the link to these slides was put in the chat box. So just click through that link, get these slides, and then you'll be able to use these links to access these other trainings that are yet to come, or the ghosts of trainings past, which you can view online. And if we're open for any questions that you have. We are here. We are about a half hour before our closing time, so we have plenty of time if there are folks who would like to ask questions of us. Also, Sarah has just posted in the chat, there is a link that you can follow, which will allow you to provide feedback on this training. And we encourage you to click on this Survey Monkey and provide some feedback on the training as well. Please helps us to improve what it is that we do for you. If you need to reach out to the great folks at Rhode Island Housing, we've got Rosa and Sarah's contact information, both telephone numbers and email addresses. Make sure you've got that information. And if that was not enough, here is the contact information for our participants on this training thing. We're always open and happy to get information, questions, whatnot from you all. Again, any other questions that we want to talk about? Well, while I've been talking, the clouds that Rosa implied were covering Rhode Island have moved west, and now it is no longer the bright sunny day. It's a little cloudy here too. Indeed, we've got some kind of a pre-Halloween storm coming up. You guys are going to get that too. So hopefully it'll come and go before the trick-or-treaters get out on Friday, but we'll see how the weather unfolds. And also, many of us have dear friends who come from that wonderful island of Jamaica, and they are certainly in our thoughts and hearts right at this moment. We hope that it is not as devastating as they're saying it could be, because there are great, great people on that island. If you know me, I can babble on incessantly, but that's really not that interesting. So I guess, not hearing further questions, not having information, I think we're going to say thank you for being with us this morning. It's always a pleasure.